Hey traders, checking into the stock market today. Started the morning strong with some growth names exploding to the upside, but bears played defense. They took out our lead bull general. I'll tell you what I mean. We'll see where we stand. All right, so looking at the NASDAQ and S&P 500, pretty straightforward on our futures charts with a clear rejection from resistance and a pullback. So now we can zoom out to the 4-hour time frame. If we lose the 4-hour uptrend and confirm a downtrend, then our daily lower high is convincingly set and we will be looking towards support. And that for QQQ is going to be down at 279.80. So we can see we are pretty much $10 above support and we are maybe $7 and change below resistance. So we're not quite to the midway point of this range, but it was a notably hard rejection. And I over traded today and gave back my morning gains, which I'll talk about in just a minute. But for me, it was too many shiny objects. There was a lot of volatility in some of our higher risk, higher reward names. So I'll talk about that when we get towards the growth sector and IWM. But as far as the NASDAQ was concerned, there was no red flag with our rejection. So we had the high of the day pulling back under resistance. The bulls then played defense very well. So all morning I'm saying, all right, can we break this low of the day for bears to convincingly reject from resistance? And so once the answer was no, I started thinking, are we going to break resistance here? And we climbed our way back, rejected from the high of the day. So now a triple top at that daily resistance, just under it by less than $1. And even then, this consolidation, there are no red flags for me on that pullback. The red flag starts coming in right here, and then we figure out the reason why at 130. Essentially, well, the reason why is Apple bearish news came out and essentially starting to price in some bearish information that's going to come out with their earnings, or that would come out with their earnings, just in terms of slowing down hiring and spending in 2023. And you're going to see that headline a lot for most companies, in my opinion. But the market clearly reacted to it, and everything reacted to it. And at that point, from 130 onward, the rejection and healthy consolidation shifted into a rejection and very significant bear follow through and bear volume. And the analogy for me, going in line with Japanese candlesticks, which were created during a time where war was very much ingrained in Japanese society back then in the 1800s. Essentially, it was the bulls were storming the gate. The bears were playing defense. The bears' backs were against the wall at resistance, and the bears took out the general. So the general, as I've been referring to, was Apple, our lead tech bull. And they took it out in a big way with that news. So big drop down from Apple. The rest of the tech sector followed along with it. And now Apple has the resistance level with this double top. It was the highest level that we've seen in 2.5 months, maybe just 2 months. 2 months and a week. But now it's a double top. If we were to drop down and break 142.12 from here, that's a big win for the bears. I'm watching it from the weekly perspective. We would then be watching for the potential of an inverse head and shoulders. Earnings would dictate how that would play out. But a very clear double top rejection with bearish news. And now I'm watching 142.12 as a key daily support level. S&P 500 was weaker than the NASDAQ initially because the healthcare and financial sector were at the low of the day at the same time, while the NASDAQ was not. So here's our rejection from resistance. And again, looking at SPY, our support is down at 371.04. Again, we're $1 or $10 above that level, and we are $9 below resistance. So the S&P 500 is just about at that range, at the middle point of that range. So if bears follow through tomorrow, daily lower high is very convincingly set. There's a gap to fill on SPY at 379.05 for QQQ. There's a gap down at 287.56. And what the bulls would have to do is, of course, then hold support and then break resistance. So how we break this equilibrium is going to have a very significant, well, not too significant. It's going to mean a lot in the short term, but then we're just going to roll into next Tuesday, Wednesday, Thursday of next week, which is FOMC, Apple, Google, Amazon, Microsoft earnings. And that is going to be a lot of fundamental information that is going to see significant price reactions. I do believe we will break before then, but it could also tighten up all week. If we have a red day tomorrow and pull back, and then a green day on Wednesday to try and set a daily high or low, next thing you know, we're in the last couple trading days of the week, and we're still right in the middle of this equilibrium. So we'll see what tomorrow gives us, but a big win for the bears playing defense. And of course, if the bears are going to go on offense, they've got to take out these daily high or lows in both the NASDAQ and the S&P 500. SMH, 218.81 was a resistance level, and I'm calling that a double top. And that's because we only broke resistance by about 17 cents. NVDA started the day as a laggard, and I call it a laggard because we didn't have a daily uptrend to end last week. Meanwhile, all of its peers did. Most of its peers did. So today we started with a ton of follow through for the bulls and then sold off again when the NASDAQ bears showed up on the Apple Bear News. Big pullback. There's a ton of names that will be scouting hourly lower highs to be the result of the next bounce. So right now, NVDA can bounce 4% and just be looking for a daily or an hourly lower high to be the result of that bounce. So if we open higher tomorrow, I'm scouting hourly lower highs. If we open lower tomorrow, I'm going to patiently be waiting to scout hourly lower highs as the result of the next bounce because of the size of this pullback. Tesla, bulls started the morning strong. We were unable to break 765 resistance. Hourly, again, it's still an hourly uptrend, but there's a lot of space for the hourly lower high to be the result of the next bounce, which in my opinion is the most likely scenario on a ton of individual names and sectors next time we do see that hourly bounce. Healthcare. So healthcare was the lead bear all day. Very clearly, it was down over 2% today, whereas even with all that weakness on QQQ, not close to being down 2%. So this is a potential head and shoulders. And because of the size of this pullback, we knew to be watching for the potential of the daily lower high. Now we have it, and it's just a question of, do bears break 125.23 support for further weekly consolidation? Right now, the bulls are attempting an inverse head and shoulders on the weekly. But if we drop down and break the low of consolidation at this point, that will definitely be a win for the bears. 125.23. Financial sector broke 32.34 resistance, but we're not in a daily uptrend. And we can essentially just look at the range that we've been within for the last month as we're working our way through earnings for this sector. And I'm viewing this as a double bottom. And if we don't break 32.87, simple statement, bulls aren't going anywhere. That's the highest level we've seen in the last 2 months or so. So as long as we're between these levels, we are range bound. And we are right in the middle of this range. Pretty much exactly in the middle. Next time we bounce, we'll scout an hourly lower high, anything under 32.45. So tightening up, it doesn't look as nice and clear and clean as the broader market, the S&P 500 and the NASDAQ, I should say, but it's very similar in its tightening range that we've been within for the same period of time. IWM, same deal. Failed resistance 177, pulling back, looking for an hourly lower high next bounce, and the bulls will have to defend 167.02 to try and see us remain in this tightening daily pattern. So growth names stood out very strong this morning, and over the weekend we had cryptocurrency bulls standing out very strong Saturday into the futures open. And I know a lot of you don't follow crypto, but just as an example from, what was Friday, the 15th? So from market close, this is just one of them, Ethereum, but Ethereum was up over 20% over the weekend into today, and there were other names that were up even more than that. You know, Matic here up 30%. So crypto bulls showed up in a big way and saw some nice follow through. So okay, that's in the back of my mind. High risk, high reward names seeing strength. Broader market opening futures stronger, somewhat in response to that, not in response, but in line with that. We then had crypto names, crypto stocks, exploding today. MARA was a slow grind, short squeeze, where we were up 25% from the open, and then on the day it was up 33% plus. And in the last 2 weeks of trading, we're up over 100%. So that's just a shift where everybody was on one side of the boat, too many bears, and daily trend change confirmed. So a little mini short squeeze and just a little bit more risk on mindset. And it was other names as well. Riot did the same thing. Again, massive volume, highest volume in months and months. So I'm watching that on the morning and saying, okay, that's another indication of potential risk on. Then we get the crushed Canadian cannabis space. CGC was up 20% on the day at one point today. TLRY shot up as a laggard in response to that. This 30-minute move on TLRY is 9%. So I'm seeing the very high risk, high reward cannabis space join in on the growth, or I should say the risk on mindset. And so all of these things are happening, and I'm saying, all right, well, I'm going to increase my bull position size a bit for the potential that we're going to see the NASDAQ consolidate on the 15-minute time frame here, set a higher low, and then break daily resistance. So I was looking at growth names that had not broken out yet. I was looking for the laggards, and an example is MNMD. So MNMD on the daily time frame was shaping up an inverse head and shoulders, and at that point in time, it's in the 71s. So I make an entry, we break 73, double top resistance, and it looks great. You know, it's very quickly up 3% from my entry. We break resistance. So that's how I spent my morning as far as positioning for the potential that the NASDAQ and the S&P 500 are going to break resistance. Now, one thing that I did well was recognizing the red flags for the pullback on this resistance rejection before the Apple news came out. Again, pretty much right here, I started to say, okay, that's a little bit more than I want to see. And then right here, I say, all right. And at that point, I'm starting to exit the risk on that I took on today and saying, no, I can't get aggressive right under resistance. So what I did well was exiting a good chunk of most of those risk on positions that I took for today. And what I did not do well was, again, over trading, definitely too many shiny objects going to TLRY. And then I was shorting MARA, and I was shorting the biotech sector, and then I was playing Riot for a bounce. I was just too scatterbrained, not focused on just a couple names. I should have been focusing on the biotech sector, which I was on the morning bearish, and maybe just one other of the runners. But stopped out of the biotech sector bearish on the morning because I was playing off of the high of yesterday and got the initial quick little pullback, exited half because I was in first thing, and then stopped out when, I forget which level I used, but I think 8404. Then once I recognized that the biotech sector had a double top by 1 penny, I was like, all right, well, I'll try bear again. And so I did get some of the bearish action. What I did not do well with my bearish positions, I had some good bearish positions. So I had a good XBI bearish position. I had a good MARA. First time I've traded options in months because it didn't have any shorts. So I grabbed MARA 1050 puts when it was trading up around 1090. I had Riot short from this 5-minute lower high here. I think I was short from 669, but I didn't let them play out. They were all day trades. Initially, that was all I was looking for, was day trades. And at that point in time, the Apple news had not hit yet. So I can look at that and say, okay, well, I was exiting those short positions because I did not have confidence at that point in time in a hard rejection. Obviously, if I were in shorts after the Apple news had hit, it would be a lot easier to hold them and let them play out longer. But I was too focused on the short-term timeframes and not enough on the daily. I needed a little voice in the back of my mind saying, well, what if this is our daily lower high and we pull back down with multiple red days from here? And that mindset would have helped me think bigger picture, rather than just looking for a 15-minute pullback and a 15-minute higher low. I would have been thinking about the daily pullback and would have established some better swing positions that would have been easily risk-free on those shorts. So that was my lesson for today, and it became pretty clear to me, midway through the day, I am over trading because I had a decent morning. I started with a half-day loser on the biotech sector short that I stopped out of, but then, by late morning, I've got a day maker, and then by end of the day, gave back that day maker back to break even and was down a day maker. So gave back too much by over trading and not having enough bear exposure. And that's a nice little wake-up call after Last week was mostly flow state. Today was definitely not flow state. There were little brief periods where it was flow state mid-morning, but didn't keep it. So the biotech sector, I'm looking for the potential for weekly consolidation here. Higher low every week for 5 weeks now. The double top on the daily, and if we drop down and break 78.09, we confirm a double top and loss of the uptrend. And that would confirm weekly consolidation is underway. So I'm watching for the biotech sector. I'm scouting an hourly lower high next bounce. So I'm looking for a short in the biotech sector, swing trade mindset. Ideally, I'll look for a day trade for an hourly lower high, and if it goes well, I'll exit half that position, be risk-free, and then look for the potential to hold it for a swing if it continues to play out how I want to see it, which would be setting up an hourly downtrend to be confirmed. If the bulls can hold 78.09, that's definitely going to be a win, but broader market will have a significant impact. And if we just look at XBI divided by SPY to see relative strength and relative weakness, we can see the past couple of days there's been some relative weakness. And I was shorting the biotech sector for day trades on Thursday and Friday. So I've had this short-term bear lean on the sector, and we'll see if that continues. So again, the growth names, CGC, notable move coming off of absolutely crushed. It doesn't look notable, but that's 213 to 274. That's 30% real quick. But broader market weakness, a lot of these growth names have to be cautious of potential head and shoulders like patterns. So CRWD here, if we fail 194.85, which we certainly did today, if we pull back from here, a bear break of 167.65 will change this daily uptrend that we've had for weeks, and it will change to a daily downtrend. And then we will zoom out and look for weekly consolidation. But just have to be cautious because a lot of these growth names look this way. PLTR looks that way. I drew that before today's trading, but watching for that daily lower high. Snow, potential daily lower high shaping up. So if the broader market were to pull back for a couple of days here, we're setting up for the potential that these growth names shift into weekly consolidation, which is essentially what I'm watching for on the biotech sector, which I attribute as part of growth. So a couple key daily supports to be watching on all these growth names. And of course, it's all about the broader market and its tightening daily range. The VIX is still in a weekly equilibrium, trying to form a higher low compared to 23.74. Again, this is months in the making. And I'm very surprised at how weak it is still. Not even close to the high of Friday, while all of our major sectors were dropping at the same time today. Generally, when you see that, you get a big solid green VIX day. But today, not the case, just a little inside bar. The dollar pulling back, 4-hour bounce, trying to play out. Keeping an eye out for longer term pullbacks on the dollar. I'm watching for a weekly consolidation and then scout a weekly higher low. But if we keep daily EMA 12, we're not going to see weekly consolidation. And again, keeping an inverse type of mindset with the dollar and the broader market. We can see the dollar bounce started on the 10 a.m. candle and the SPY pullback started, or the QQQ pullback started right around then, just a little bit later. Again, that news changed everything. Everything on the day changed when that news hit with the significant follow through. Oil, the daily falling wedge we've been watching, is breaking bull. So I now take that off. Don't care about it anymore. Now what I'm watching is the daily lower high resistance of 105.24. And if we reject from that level, we'll watch for the bulls to attempt an inverse head and shoulders here for the daily trend change. So I care about 105.24 resistance in the short term and the 4-hour uptrend, knowing if we lose the 4-hour uptrend, that daily lower high is likely taking shape. Energy sector is very similar with its falling wedge-like pattern. Bulls would have to get over 72.14. If we don't, they will attempt an inverse head and shoulders. Gold is not doing anything. Gold is still extremely weak, even with the dollar pulling back. Gold and silver, not even close to daily EMA 12 resistance. I'm not going to look at gold and silver again as long as daily EMA 12 is resistance. Get over that, and it will be enough of a shift to then start to do some analysis. But I'm just going to keep it simple and save myself time. If daily EMA 12 is resistance on gold and silver, the bears have absolute complete control. All right, that's where we stand. Big win for the bears as far as playing defense. We'll see if they turn it around and go on offense. If not, we'll have tightening daily ranges into the end of the week. And I hope you're well. Do good things.